Good morning, everybody. Hey, welcome to Monday. It is July 10th. Hope you guys had a great weekend as we launch into this second week of the third quarter of 2023. Hard to believe this year's just flying by, isn't it? Hey, before we get started though, and Dave joins us here in just a few seconds, don't forget that there's a lot of things in this world that you and we have no control over. However, you can take control of your retirement portfolio by knowing how much risk you have and knowing how much risk you should have. That's the one thing you can control in your portfolio is your risk. That's why I developed the core retirement design to help people isolate and determine what that should be for them. Give us a call at 863-382-0037 to schedule your core retirement analysis. And with that, we've got Dave coming up next.
FM, that is the music of Journey there. It's 8:40 now, 20 here before 9. Let's check in on your money and see what's happening this morning on Wall Street. Wasn't a particularly fun week last week. Let's see if we can make this week a little bit more fun. Check in with Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. It's good to hear your voice this morning.
Hey, good morning, Dave. It is good to be here. It is. Hope everybody had a great weekend. I know we were celebrating our youngest grandson who just turned one, or he'll turn one tomorrow, but we celebrated Saturday. So over in Tampa, so a good time had by all.
Oh, I'm glad. Happy birthday to the Munchkin. Get us back to last week here, and Friday closed out pretty much in the lackadaisical way the rest of the week went. The Dow fell by 187. Standard & Poor's down by 13. NASDAQ was down 18. It just was not a particularly pleasant week. About the only thing that gained was the VIX, and it was up by 0.5%. And again, perspective. 15.36 on the VIX is still inordinately low for the last few years worth of history, but it's starting to climb up a little bit as we're getting more and more nervous about the Federal Reserve in a couple of weeks.
Yeah, it is. I mean, it's bumping a little bit. I think it's up 0.5% this morning. So, but you're right. I think there's some nervousness about what's going to happen with the Fed. And I think we can pretty much know that we're going to get some kind of increase coming forward. The question is how much and how many. And you were telling me before we went on there that you've been looking at some different numbers coming out from folks.
Yeah, the Chicago Mercantile Exchange Group, the CMA Group, they keep a set of odds as to what economists think is going to happen. And right now they're saying investors are pricing in a 93% chance the Fed raises rates this month. And here's the part that hits, because we've been going back to that fake phone call that got Paulson a while ago when he said there's only going to be 0.25% hikes all year. Now they're saying there's a 40% chance of at least 2 more 0.25% rate hikes between now and the end of the year. So we're looking at like a total of 3 more, according to what the odds makers are saying. And that can't make the market real optimistic, especially in the growth stocks that are interest sensitive.
No, it really can't, Dave. And that's, I think we're seeing some of that actually probably this morning and some of the ups and downs and trying to figure out what they're doing and what they're trying to say here. And it's hard to say. We got that little reprieve this last meeting, and I think everybody liked that. The question now is because there was, like you said in the report, there's a lot of dissension between what that should look like, and so my fear is that there may be more, not less.
Yeah, this was one of the more interesting reactions to a Federal Reserve minutes last Wednesday than we're used to seeing in the process, because we found out basically these birds can't agree on much of anything. It was almost a split vote as to whether or not they should be raising interest rates again, how hawkish, how dovish they should be. They're basically all over the board right now. So. And we've always said, if there's one thing Wall Street does not like, it's uncertainty, and they don't have a roadmap right now, which has investors on the volatile side at the moment.
It really does, Dave. So we'll have to continue to just watch the Fed and see. I think earnings season is going to play a role. But I think the economic numbers that we have coming out this week are probably going to play a bigger role
Yep.
in what the Fed decides to do.
It's going to be a busy week economically. I mean, we start out then tomorrow morning, we're going to get the small business optimism number. We're going to get some inventory numbers later on this morning, even as far as wholesale inventory is concerned. We start with the big stuff on Wednesday when we start getting a producer price index number coming out on let's see, consumer price index number comes out on Wednesday, consumer inflation. Wholesale inflation comes out on Thursday. Consumer sentiment comes out on Friday. And then on Friday, we start earnings season because that's the date that all the big banks are slated to start reporting. So this week could be a real busy week in terms of reaction, depending upon what the government data dump says on us.
Well, yeah, and it could be a big movement. Big things could happen and make the move in the market both either up or down. We don't know, depending on what those numbers come in at.
Absolutely. One thing that I've got as we start looking ahead toward the Friday beginning of the really big earnings reports, the fact set people, and these are the people that create the expectations that the street's got to meet or beat. The fact set people said on Friday that the S&P 500 companies are expected, when earnings season comes in, to report a 7.2% drop in earnings from last year. That would make it the largest annual drop since the second quarter of 2020. And I don't think any of us really want to remember the second quarter of 2020 because that's when we shut the whole world down for a month and a half.
Yeah, that was a quarter of huge uncertainty. And yeah, we don't want to see that happen again for sure.
Pretty crappy quarter to use as a standard of comparison, but that's what it'd be. It'd be the biggest drop since the second quarter of 2020. Good gosh almighty. So there's a little edginess on there, and then we add a little bit more because you got some tidbits out of China. It seems their economy is kind of starting to tank a little, isn't it?
Yeah, it's interesting. Got a little tidbit here. Their CPI, consumer price index, was a little flat, came in under what they expected, and so that was not good news for them. I also saw a little bit of a headline that said that China's economy is in big trouble, and investors should get out, is what one guy is saying. But they basically are saying that China's in such trouble, they need us as much or more than we need them right now.
It's at that point. My first reaction when you shared that with me when we went off the air. By the way, I just had something come across my ticker. Alibaba, JD.com stocks that have Chinese roots, they're falling like rocks this morning if people worry about deflation in China. When you shared that with me, my reaction was maybe this is good for at least geopolitical factors at the very least, because if Chinese economies start going into the crapper, well, it might take their eyes off Taiwan and take the tensions in that neighborhood down a little bit. So on balance, it could be good for us, even though we don't like seeing a trading partner go south.
Well, that's true. And it could help us from a trading standpoint as well, right? Because now they need us to be buying their stuff as much as we need them to produce stuff and get it to us.
Absolutely. We certainly never mind deflation on prices for somebody we're buying from, which is what we do by a very wide margin with China. If their prices are going down, that's good for us too.
That's true. It is good for us.
I hate to look at it like a zero-sum game, but to a certain extent, assuming they don't completely crash and burn, a little bit of a challenge in the Chinese economy could actually be good for us from both a geopolitical and an economic basis. Other things we should be looking at this week. I think we pretty much ran through the gamut. It's going to be one heck of a busy week once we get past marking time today, isn't it?
Well, yeah, I think really Wednesday's going to be, tomorrow's going to be another, not much, no really earnings coming out. We'll have the National Federation of Independent Businesses, but that's really about it tomorrow. But Wednesday, hold on, man. It's things will start happening.
Yeah, the CPI is going to probably be the big market mover on Wednesday because if it shows any kind of an increase or less of a decrease than economists expect, that's just going to completely bake in that interest rate increase at the end of the month, which we both know from sad experience that can move the market way south, way fast.
That's right. It really can. So we'll keep our eyes on that as we try to guide folks through it.
I gotcha. Resetting the table for the morning, as mentioned, it was an off day on Wall Street on Friday. Basically, the only people that made money were the ones that were invested in the VIX. 45 minutes before we open this morning, how are we doing so far?
Well, it's still a mixed bag, Dave. Everything is sliding, though. The Dow is the only thing that's in positive territory, and it's not by much, less than 0.1%. The S&P 500 is down by $2 right now, and the Nasdaq 100 is down by about 0.1%. So even the VIX is down right now, Dave, by about 0.2. So nothing other than the slight little bit on the Dow is actually green. On the other side, we've got silver taking a bath again this morning, down 1.3%, below $23 to $22.98 an ounce right now. Gold down 0.6 to 19.19 an ounce, and then gold is down. Crude oil is down 1%, $73.14 a barrel right now.
That's considerably up from Friday morning. So that doesn't make a lot of sense as to why crude would be going up, because all of the rumors about China would tend to indicate a slowing economy, wouldn't it?
It would.
Yeah.
Maybe there's talk of some more cuts somewhere that we haven't seen yet.
It's possible. I can tell you the Asian Rim was more mixed than you'd expect it to be based upon that information. The Japanese markets were off considerably at 6 a.m. this morning. Rest of the Asian Rim markets mostly were flat to slightly up, which is kind of a curious invention. Over in Europe, we're up fractionally across the board halfway through their trading day. Getting my retirement on track is a task that takes a fresh pair of eyes with the inside knowledge that the average consumer doesn't have. How do I find you to be able to get my retirement on track?
Dave, we see a lot of risk, a lot of ebbs and flows in the marketplace, which is risk. And that's one thing that folks can control. They just need to know how much they have and how much they should have. And that's why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning, same time. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you guys had a great weekend and your week is off to a great start. Join us again tomorrow, same time, same place. Until then, have a great day. Bye now.